Dear students, welcome to the 8th session on the chapter Final Accounts of Companies. Here in this session, I am going to take up the next question. So let me read this question now. From the following trial balance of Lanco Limited, prepare final accounts in the vertical form. So in the trial balance, we find cash at bank, machinery, 15% HDFC bonds, interest on investment, sinking fund investment, depreciation on machinery and buildings, then building, interest on debentures till 30th 9 2010, datas and creditors, purchases and sales, debenture redemption fund, share capital, shares of rupees 10 each, interim dividend, taxation provision, profit and loss account, directors fees, carriage on purchases, wages, discount on debentures, interest on debenture redemption fund investment, wages outstanding, stock on 1/4/2010, goodwill, taxes paid, office expenses, salary for 11 months which is paid, bad debts, 15% debentures, general reserve, transfer fees, provision for bad debts and unclaimed dividend. Then in the adjustment we find make provision for doubtful debts to the extent of 5% on datas. Second month stock at close, that is closing stock is at 25,000. In the bracket they have given also the market price at 22,500. Transfer to debenture redemption fund rupees 2,000. Right of 50% of discount on debentures. Provide for taxation to the extent of 10,000. Tax liability for the accounting year 31st March 2010 is fixed at 9,000. Okay, so this is the question appeared for 24 marks. So as usual we need to prepare the solution, or we need to show the solution in 4 steps. First we will be preparing the notes relating to profit and loss account, and then we are going to prepare the profit and loss account. In the third step we show the notes relating to balance sheet, and finally in the fourth step we prepare the balance sheet. So for that we need to first identify which items have to be shown in which note number. Coming to the first item, cash at bank, we have to show that in note number 19, that is cash and cash equivalents. Then machinery, it is a fixed asset, we have to show in note number 11. 15% HDFC bonds, so it is the investment made in HDFC bonds, which is a non-current investment, we have to show in note number 12. Then they have received the interest on investment, so it should be taken in note number 23, that is other income. Then sinking fund investment, so again it is a non-current investment, we have to consider that in note number 12. Then depreciation, if the, as I told you in one of the sessions, the depreciation when it is given in the trial balance, they have already adjusted that to the concerned asset, that is machinery and building. We have to just show that in the note relating to profit and loss account. So these two depreciation, that is depreciation on machinery and buildings, we are going to show that in note number 29, that is depreciation and amortization expenses. Then we have buildings, we have to show in note number 11. Interest on debentures, it is paid up to 30th 9 2010. Okay, this trial balance is given on 31st March 2011. So we have to calculate the interest from the month of October, November, December, January, February, March. For first 6 months they have paid the interest, another 6 months it is pending. So paid plus outstanding, we are going to show that in note number 28, that is finance cost. Then the outstanding interest has to be added to the debenture amount in note number 3. Then we have debtors and creditors. Debtors is a trade receivable, we have to show in note number 18, and creditors is a trade payable, we have to show that in note number 8. Purchases, it is, we have to show in note number 25. Sales we have to show in revenue from operation 22. Then debenture redemption fund, it is a accumulated fund, we have to show in reserves and surplus, that is note number 2. Share capital we have to show in note number 1. Interim dividend, so it is a appropriation of profit, we have to show in note number 2. Taxation provision, if the provision for taxation is given in the trial balance, so that is the provision created during the last year. So if you see here, they have created to the extent of 12,000. Let us discuss about this taxation little later, because there are some other adjustments as well. Okay, now taking up the next item, that is profit and loss account, we have to show in note number 2. Then directors fees, it is a other expense, we have to show in note number 30. Carriage on purchases, note number 30. The next one, wages, we have to show in note number 27, that is employee benefit expenses. Discount on debentures, we have to show in note number 21, so it is a fictitious asset we have to show in other current assets, note number 21. Then interest on debenture redemption fund investment, so they have received the interest on the investment which is made out of the debenture redemption fund or sinking fund, so it should be added to the fund itself in note number 2. Then wages outstanding, usually we find this outstanding wages or outstanding salary in the adjustment, but here it is given in the trial balance, which means that we need the outstanding wages, it is already added in note number 27 to the total wages. We have to show that as a liability, current liability in note number 9. So actually we have two adjustment, but one adjustment relating to profit and loss account is already over. This has to be shown as a current liability in the balance sheet in note number 9. Then stock on 1/4/2010, it is the opening stock. We are going to consider that in note number 26, that is changes in the inventories. Then goodwill, note number 11, that is fixed assets. Taxes paid, again let us discuss about that later. Then office expenses we have to show in note number 30. Salary for 11 months, they have paid 9,900. So this is the salary which is given to the employee. So we have to take in note number 27. For this, that 1 month's outstanding salary should be added. The total 12 months salary should be shown in note number 27. And then again that outstanding salary for 1 month should be shown in note number 9, that is other current liabilities. Then bad debts we have to show in note number 30. 15% debentures we have, that should be shown in note number 3, that is secure long-term borrowings. Then general reserve in note number 2. Transfer fees, if you check here, it is a credit balance, so it is the transfer fees received, so it should be taken in note number 23, that is other income. Provision for bad debts, so this is the old reserve which they had created earlier, so it should be adjusted to the bad debt in note number 30. Then unclaimed dividend we have to show that in note number 9, that is other current liabilities. Then taking up the adjustments, first one says make a provision for doubtful debts at 5% on datas. Okay, it has to be shown twice, once in note number 30 while adjusting it to the bad debt. You are going to create the new RBD, so 5% has to be created on the datas amounting to 25,000. Data's amount is 25,000. On that we have to calculate 5%, which comes to 1,250. Okay, so how do we show that in note number 30? Bad debts, add new reserve less old reserve. Okay, then one more time you have to deduct it from datas in note number 18, that is trade receivables. Then coming to closing stock, once it has to be shown in note number 26, that is changes in the inventories. One more time it has to be shown in note number 17, that is inventories. But here they have given the book value as well as the market price. The valuation of stock says that we have to consider either the book value or the market price, whichever is less. So if you compare here, the lower amount is market price, so we are going to consider 22,500. Then transfer to debenture redemption fund, so it is appropriation of profit. Once we have to appropriate it from profit, total profit available for appropriation in note number 2, then again to the old debenture redemption fund we have to add it. So both the adjustments we are going to show in note number 2. The next one, write off 50% of discount on debentures. Okay, so here this discount on debentures we have that in trial balance, it is shown in note number 21. Okay, the return of balance should be deducted from that amount. Then again when you are writing off certain portion of the fictitious asset, it becomes amortization expenses. You have to show that in note number 29. Then provide for taxation, so this is the provision for taxation which you are creating for the current year. So as usual what we are going to write, so it will be shown in note number 10, that is short term provision. One more time it has to be shown in profit and loss account, that is under tax expenses. Okay, then tax liability for the accounting year 31st March 2010 is fixed at 9,000. Now let us discuss about this taxation. You don't go to get confusion with the provision for taxation of the current year. So for the current year, this 10,000, the adjustment is very simple. You are going to show that in note number 10, that is short term provision. One more time you have to show in profit and loss account under tax expenses. But coming to the tax adjustment of the previous year, there are three informations. The first one is that they had created taxation provision to the extent of 12,000. but the adjustment says that the actual tax liability has come to only 9,000. So what is the excess provision you have created? 12,000 minus 9,000, 3,000. So this is the excess provision which they have created. So we have come across this adjustment even in the previous question. What you have to do, if there is excess provision, that should be added to the profit and loss account balance in note number 2. Okay, when we calculate what is the total profit available for appropriation, we are going to add this balance, that is excess provision of rupees 3,000. At the same time, we have to also compare, here one more item is given, that is taxes paid. The actual tax paid is 10,000, but the actual liability has come to only 9,000. So what is the excess tax paid? It is 1,000. So it is like any other expenses paid in advance, prepaid expenses. So it will be shown in note number 21. So there are two adjustments. Please try to understand. There is excess provision created as well as excess income tax paid. So excess provision created, how did we come to know? So the previous year's taxation provision 12,000 minus this actual tax liability, you get difference of 3,000. That is the excess provision created out of the profit and loss account during the last year. So it should be added to the current year's profit and loss account balance in note number 2. One more time, the other adjustment is that the liability was only 9,000, but they had paid how much? 10,000 rupees. So they have paid 1,000 excess amount. So it is like prepaid expenses. So you have to show that in note number 21, that is other current assets. So you can show this taxation related working note in taxation related calculation in the working note. That is, how do we calculate the excess provision as well as excess income tax paid? So taxation provision which is created during the last year is 12,000 less actual tax liability 9,000, we get 3,000. So it should be added to the profit and loss account balance in note number 2. Then tax paid in advance, the tax paid is 10,000 but the actual liability is only 9,000, difference is 1,000. So this is the taxation paid in advance or prepaid expenses. So it should be taken in note number 21, that is under other current assets. Okay, then as we discussed, current year's provision 10,000, there is no confusion. We are going to write that in note number 10, that is short term provision. One more time, we have to show that in profit and loss account under tax expenses. Okay, now let us take up the first step, that is showing the notes relating to profit and loss account. Note number 22, we are going to show here sales. Returns are not there, so total is 1,24,000. Then note number 23, we are going to show two items, transfer fees and interest on investment. One more 800 rupees interest is there, but that is the interest received on debenture redemption fund investment. So it should be added to the fund itself in note number 2. Here we are not going to consider. So total of this note is 2,700. 24, cost of material consumed is nil. 25, purchases of stock in trade. We have purchases, there are no other adjustments, so we are going to show only purchases 64,400. Then changes in the inventories, we are going to first write opening stock less closing stock, we have negative value of 10,500. Then note number 27, employee benefit expenses, wages we are going to write 18,000, salaries here 9,900 is paid for 11 months, then 1 month's outstanding we have to add. Please remember, here we are not going to add the outstanding wages given in the trial balance because that addition is already over in note number 27. Here the adjustment is already over. When the outstanding wages is given in the trial balance, we have to show that only in the balance sheet, that is note number 29, that is other current liabilities. Okay, so note number 27, total we get 28,008. We have note number 28, finance cost. Here we are going to write debenture interest paid for 6 months, add interest outstanding 2,250. So we have total of 4,500. Then depreciation and amortization expenses. We have depreciation on machinery 4,000, depreciation on buildings 1,600, and half of the discount on debentures which is written off amounting to 750. So total of this note is 6,350. Then we have note number 30 where we write other expenses, directors fees 2,000, carriage on purchases 2,500, office expenses 6,000. And then regarding bad debts, how the adjustment goes, bad debts add new reserve less old reserve. So to the bad debt amounting to 1,300, we have to add the new reserve which is created at 5% on 25,000, 1,250, and from that we have to deduct the old RBD, that is 1400. So RBD adjustment amount comes to 1150. So total of this note is 11650. Then in the second step, we are going to show the statement of profit and loss account. Here, note number 22 is revenue from operation. Total is 1,24,000. Other income 2,700. Total comes to 1,26,700. From this, we are going to deduct the various expenses. Note number 24 nil. 25 64 400. 26 we have negative value 10,500. 27 28,800. 28 4,500. 29 6,350. 30 is 11,650. So we are going to have the total from 24 to 30. We have total of 1,05,200. So now we are going to have the balance to know whether there is profit or loss. So here, so when you take the difference between 1,26,700 and 1,05,200, we have balance of 21,500, which is positive. So it is profit before exceptional item, extraordinary item and taxes. But as you know that exceptional item and extraordinary item, usually we don't have it. So it is nil. So we are going to directly deduct the tax expenses. So here for the current year, the provision for taxation amount is 10,000. So when you deduct it, so remaining balance would be 11,500. So this is the profit for the current year. So in the next step, we are going to show the various notes relating to balance sheet. First note is share capital. Here we are going to show equity share capital of 1 lakh. Total is 1 lakh. Under the second note number, that is reserves and surplus, we are going to write general reserve 32,300. For the debenture redemption fund, this is the old balance. For this, we are going to add the interest received on debenture redemption fund investment. Then this is the transfer made during the current year. So total amount comes to 27,800. Then under profit and loss account, we have profit which is brought forward from the previous year. We have to check it. What is the balance given in the trial balance? So here they have given profit and loss account balance. Let me check where is it. So here they have given profit and loss account. So debit balance is given. Please try to understand. So far we have seen the credit balance of profit and loss account which represent profit. But in this case they have given debit balance of profit and loss account which represent loss. Okay. So we have to write here in note number 2 minus 6,000 which represent loss. For that we have to add the profit for the current year 11,500. Then do add the taxation, excess taxation provision created during the last year 3,000. So when you adjust that, you will have 8,500. So this is the total profit available for appropriation. From this we are going to deduct two items. First one is interim dividend amounting to 5,000. The other one is transfer to debenture redemption fund. So ultimately we have balance of 1,500 from the profit and loss account. So when you take the total, it comes to 61,600. Okay, so this is the note number 2, total of note number 2. Then note number 3 is long-term borrowings. Here we have to write 15% mortgage debentures. For that the outstanding interest should be added. So total is 32,250. Note number 4, 5, 6, 7 we did not have any item, so it is nil. Note number 8 we are going to write creditors. Note number 9 we are going to write current liabilities. Here wages outstanding, unclaimed dividend and salary outstanding for 1 month should be added. So total of this note is 9,150. Then note number 10 is short term provision. So here we are going to show the current year's provision for taxation amounting to 10,000. Note number 11 is fixed asset. We are going to show here machinery, buildings and goodwill. Total of that note is 1,30,000. Note number 12 is non-current investments. Here we are going to write the debenture redemption fund investment amounting to 25,000 and 15% HDFC bond amounting to 10,000. Total is 35,000. Note number 13, 14, 15, 16 we did not have any item, so it is nil. Note number 17 is inventories, where we are going to show closing stock amounting to 22,500. So this is the least amount when compared to the book value with the market price. Okay, then here we have note number 18, trade receivables. Under that debtors less RBD we have 23,750. Note number 19 is cash and cash equivalents. Here we are going to write only cash at bank 28,000. Note number 20 is nil. Note number 21 is other current assets. Here we are going to write taxes paid in advance 1,000 and discount on issue of debentures which is not written off 1500 minus 750, remaining unwritten balance is 750, total is 1750. Now we are going to show in the fourth step the balance sheet from note number 1 to note number 21. First heading is equities and liabilities. Note number 1 is share capital 1 lakh. Note number 2 61,600 reserves and surplus. Note number 3 is long term borrowings 32,250. 4, 5, 6, 7 is nil. Note number 8 is 28,000. Note number 9 is 9,150. Note number 10 is 10,000. So total comes to 2,41,000. Similarly, on the asset side, note number 11 is 1,30,000. Note number 12 is 35,000. 13, 14, 15, 16 is nil. Note number 17 is 22,500. 18 is 23,750. 19 is 28,000. 20 is nil. 21 is 1,750. So total comes to 2,41,000. So this total is same as total of the liability side. So the balance sheet has tallied. Okay. So let us take a few more questions in the upcoming videos. Thank you for watching.